Hi, and thanks for tuning in. Today we're talking about something most people don't think about until they have to: how insurance companies determine the amount they'll pay you when you file a claim. It all comes down to something called a settlement option, and understanding yours can make a big difference after a loss, whether it's to your home, your car, or your valuables. Professional Insurance Programs is here to help you better understand how these settlement options work so you're prepared before a claim ever happens. Here's what we'll go over today. First, we'll walk through how homeowners insurance policies value your home and belongings. Then we'll look at scheduled property coverage for high-value items like jewelry and collectibles. After that, we'll shift to auto insurance and how cars are valued after an accident or total loss. Finally, we'll wrap up with some key takeaways and questions you can ask your insurance advisor to make sure your coverage works the way you expect. Let's start with homeowners insurance. When you file a claim for damage to your home or belongings, your policy will generally settle the claim using either replacement cost or actual cash value, often called ACV. Replacement cost pays what it would take to replace the item today with new materials. No depreciation is subtracted. With ACV, depreciation is factored in. So if you have an older roof or appliance, you'll get less because it's not worth as much as when it was new. Here's an example. Say your 15-year-old roof originally cost $15,000. With 75% depreciation, the payout under an actual cash value policy would be just $3,750 before your deductible. But if you had replacement cost coverage, you'd receive the funds needed to install a brand new roof, minus your deductible. That's a big difference, and a great reason to know what your policy covers before you need it. Next up, high-value items like jewelry, art, and collectibles. These items often exceed the limits of standard coverage. To properly protect them, many people choose to schedule them separately on their policy. You can usually choose between replacement cost, actual cash value, or agreed value, which is a fixed amount you and your insurer agree on ahead of time. Scheduling can also eliminate the deductible and expand coverage. Here's a quick example. You schedule a diamond ring for $10,000 using agreed value coverage. If the ring is lost or stolen, you're paid $10,000, no depreciation, no debate, and often no deductible. That predictability can offer real peace of mind. Now let's move to auto insurance. Most standard policies use actual cash value to determine how much your car is worth at the time of a loss. That means they consider depreciation, mileage, and condition. But if you want more predictable coverage, you can ask about replacement cost coverage for newer vehicles or agreed value, which is often used for classic or collector cars and guarantees a fixed payout. There are also some add-on options worth considering. New car replacement coverage pays for a brand new version of your car if it's totaled, usually available if your vehicle is less than 3 years old. Gap coverage is helpful if you're still paying off a loan. It covers the difference between your car's actual cash value and what you still owe. To help make these differences clearer, we've put together a comparison table showing how each valuation method works, how value is determined, whether depreciation applies, and which option gives you the most certainty at claim time. So here are a few takeaways. Know how your policy works before you need it. Replacement cost offers better protection but may cost more. If you have valuables, scheduling them gives you better control and broader coverage. And finally, review your policies regularly to make sure they still fit your needs. Not sure where to start? Here are some good questions to ask your insurance advisor. Do I have replacement cost or actual cash value on my home? Are my valuables scheduled? And how are they valued? Would new car replacement or gap coverage benefit me? These questions can lead to small changes that make a big difference down the road. Thanks again for joining us today. If you have any questions or would like to review your current coverage, Professional Insurance Programs is here to help. Call us at 800-637-4676, email us at info@profinsprog.com, or visit us online at insuranceformmembers.com.